Hello and welcome to Billionize, where we'll be discussing the recent performance of the stock market and what to expect in the year ahead. As many of you are no doubt aware, the stock market has had a rough year in 2022, with the S&P 500 index finishing the year down nearly 20%. This marks the worst performance for the market since the financial crisis of 2008, and it has left many investors wondering what to expect in the year ahead. So, what caused the market to fall so sharply in 2022? There are a number of factors that contributed to the market's poor performance, including the ongoing trade tensions between the United States and China, the uncertain economic outlook due to the COVID-19 pandemic, and the political uncertainty surrounding the US election. Despite these challenges, however, there are also a number of reasons to be optimistic about the future. For one thing, the market has a history of bouncing back after periods of decline. While it's difficult to predict exactly when this will happen, it's likely that the market will eventually recover and begin to trend upwards again. One of the key reasons to be optimistic about the future of the stock market is the fact that it has a history of bouncing back after periods of decline. While it's true that the market can be volatile and that there will always be ups and downs, it's important to remember that the market has a long-term upward trend. Over the past several decades, the stock market has consistently delivered positive returns over the long run. While there have certainly been periods of decline, these declines have typically been followed by recoveries and periods of growth. This is known as the market cycle, and it's a key reason why investors are generally advised to approach the market with a long-term perspective. Of course, it's difficult to predict exactly when the market will recover and begin to trend upwards again. There are a number of factors that can influence the market's performance, including economic conditions, political developments, and investor sentiment. That being said, history suggests that the market will eventually recover and resume its long-term upward trend. So, while there are certainly challenges facing the market at the moment, it's important to remember that the market has a history of resilience and that it will likely recover in the long run. By taking a long-term perspective and remaining diversified, investors can weather the ups and downs of the market and potentially benefit from its long-term growth. Another reason for optimism is the fact that the economy has shown signs of recovery in recent months. While the recovery has been uneven and there are still a number of challenges to overcome, there are also a number of positive indicators, including strong job growth and a pickup in consumer spending. So, what can investors expect in 2023? While it's always difficult to predict the future with certainty, it's likely that the market will continue to face a number of challenges in the year ahead. That being said, there are also a number of reasons to be optimistic about the future, including the potential for a vaccine-driven economic recovery, and the possibility of further policy support from the government. As we look ahead to 2023, it's important to remember that the stock market is a complex and dynamic system, and it's always difficult to predict exactly what the future will hold. That being said, there are a number of factors that could influence the market's performance in the year ahead. One of the key factors to consider is the potential for a vaccine-driven economic recovery. As the COVID-19 pandemic has shown, economic activity is closely tied to public health, and the widespread distribution of a vaccine could help to boost economic activity by reducing the restrictions that have been put in place to slow the spread of the virus. Another factor to consider is the possibility of further policy support from the government. During the COVID-19 pandemic, governments around the world have implemented a number of measures to support businesses and individuals affected by the crisis. These measures have included emergency loans and grants, extended unemployment benefits, and other forms of assistance. While it's difficult to predict exactly what form any future policy support might take, it's possible that governments will continue to provide support in order to help the economy recover from the impact of the pandemic. In addition to these factors, there are also a number of other potential drivers of market performance, including economic conditions, political developments, and investor sentiment. While it's difficult to predict exactly how these factors will play out in the year ahead, it's likely that they will all have an impact on the market's performance. In conclusion, while it's always difficult to predict the future with certainty, there are a number of reasons to be optimistic about the stock market in 2023. From the potential for a vaccine-driven economic recovery, to the possibility of further policy support from the government, there are a number of factors that could contribute to the market's performance in the year ahead. As with any investment, it's important to remain diversified and to approach the market with a long-term perspective. This means investing in a mix of assets, including stocks, bonds, and cash, and being prepared for the possibility of short-term market fluctuations. In conclusion, while the stock market had a tough year in 2022, there are also a number of reasons to be optimistic about the future. While it's always difficult to predict the future with certainty, it's likely that the market will eventually recover and begin to trend upwards again. As with any investment, it's important to remain diversified and to approach the market with a long-term perspective. Thank you for watching this YouTube video. We hope you found it informative and insightful. If you like this video, be sure to give it a thumbs up and subscribe to our channel for more updates on the stock market and other exciting topics.